Welcome to Turning Hard Times to Good Times. I'm your host, Jay Taylor, and I'm speaking to you from New York City on this third day of March 2020. We do want to thank each of you for listening to this show, making it one of the more popular shows on the Voice America Business Channel. And I do want to invite you to keep sending along any questions or comments. Whatever you have to say about our show, we like to hear from you. Send it to questionsfortaylor@gmail.com. Questions, the number 4Taylor@gmail.com. And we do want to thank our sponsors for making this show viable. Today's sponsors are Eli Gold Royalties, Great Bear Resources, Hannon Metals, Irving Resources, Lion One Metals, Novo Resources, and Sitka Gold Corp. I've titled today's show Lenin Think, after a recent essay written by Dan Oliver, who will be with me in the second half of today's show. Also joining me today will be Quentin Henning. He'll be in the second segment of today's show, and Michael Oliver will be with me in just a moment, a few minutes from now anyway. Before we get further into this week's show, I have some things I want to share with the subscribers to my newsletter, Jay Taylor's Gold, Energy, and Tech Stocks. Over the past few days, we learned of my mother-in-law's passing, and on the 7th of March, our son Scott has promised to marry Sarah Rochot. So over the past few days, our family has not only experienced the bitter sweets of life, but it has also required a great deal of time to take care of matters related to both of these extremely important events. As such, I will not be publishing my usual weekly newsletter, and because of these demands on my time, I told my subscribers that I would pass along on this radio show a few of my more important thoughts regarding companies that are followed, and also promised that I would provide some of my thoughts about the markets. Little did I know how chaotic they would be by this time. But thankfully, as I just noted, Michael Oliver will be with us to talk about that. And he has always his prescient ideas and insights into what's going on. So I look forward in just a moment to hear what Michael has to say right now. But let me just pass along some of my thoughts about 4 or 5 very important company news events that have taken place. First of all, Balmoral Resources has agreed to be taken over by Wallbridge Mining. And under the terms of this transaction, all the issued and outstanding shares of Balmoral will be exchanged at a ratio of 0.71 of a Wallbridge common share for each Balmoral share. Well, this has allowed the stock to trade up by quite a bit over the last few days. Actually, just on Monday and today from the disastrous Friday trade. And I've done quite well personally with this, so I'm planning and actually have sold my individual shares of Balmoral and have taken the cash. And there are many places to employ it, as we'll be talking about over the next number of weeks. The second item I'd like to mention is Palangio Resources announced that its drill intersected 1 3/4 meters, grading 314 grams per ton gold at its Grenfell property near Kirkland Lake. Now, I stopped by Palangio's booth at the Toronto PDAC show yesterday and was given a quick review of that exploration program, and I think this little penny stock may well be on to something very worthwhile paying attention to. And I hope to comment more on this story very soon in the next newsletter that I write, probably a week from this Saturday. Gatling Exploration Inc.'s maiden drill program at Kervit Prospects has hit some good mineralization, 13 of 16 drill holes. Now, this is aside from its flagship Larder project in Ontario, which I consider to be a relatively low-risk exploration story, and feel confident in believing that the Larder project will eventually host at least, probably a multi-million high-grade near-surface gold deposit. So I'm very optimistic about Gatling and this new news that came this week that the secondary project they're also having a great deal of success with. In the second segment of today's show, Quentin Henning will be talking about the amazing progress that is being made with mechanical separation on the company's Egina and Beaton's Creek projects in Australia. As it turns out, this exciting technology can get rid of about 99% of gold-bearing rock on site. In other words, mine the material, run it through a separation, and return the waste rock right back into the mine site. while generating very high concentration of gold nuggets. The next step will be to scale up with the field test, but if this works as it seems it should, the economics for Novo's vast gold reefs should be extraordinary. And you will hear more about all of that separation technology in the second segment of today's show. But on March 2nd, that's yesterday, Novo also announced that it has agreed to purchase 15 million common shares of a private company called Newfound Gold Corp. That's a private company that has made what seems to be an extremely exciting gold discovery in Newfoundland. Now, hence the name of this company, Newfound Gold. Newfoundland, Novo will own what amounts to 16% of this company, but of equal importance is the fact that Eric Sprott also will own about that amount, 16.79% of this company, and Rob McEwen is also an investor of some size. Now, Newfound is focused on exploring its wholly owned Queensway project, located near the town of Gander, central Newfoundland. Beyond anyone's expectation, the very first hole drilled was astonishingly successful. It graded 92.86 grams of gold per ton over 19 meters, including 285 grams per ton over 6 meters. And what's more, the estimated true width of this zone is something around 13 meters. This is extraordinary. Of course, one hole does not make a mine, but to hit the very first hole with grades like that is very, very unusual. Keep in mind that Novo also recently announced that it, along with Eric Sprott, have taken a large position in a company in Australia that Quinton Henning believes owns a look-alike gold discovery akin to the high-grade Fosterville project, in which Quinton recognized the value that actually eventually led Kirkland Lake to gain that project and to really recognize the value there. Subsequently, Fosterville really became the company maker for Kirkland Lake. And just as an aside, I have heard via the grapevine that Eric Sprott's goal now is to find a second successful company like Kirkland Lake. Is it any wonder then that almost everything that Quinton Henning likes, Eric Sprott is also involved with? Well, I think not. I think it's no accident. And now, for the benefit of my subscribers as well as the listeners of this show, I'm happy to tell you that Michael Oliver is with me. Thanks for joining me, Michael. And I really have to ask you, what's going on in these markets? It's becoming increasingly volatile since you and I last spoke a couple of weeks ago.
All kinds of good things. Let's see. Stock market has come into play and obviously therefore shattered certain expectations and flows of money and investor preferences. T-bonds continue to explode naturally, and gold is firm back to its highs. I say back to its highs on a $50 basis. The high early in the month was $16.50. We dropped back into the 1500s, back to $16.50 today. Also, another factor that, frankly, our reports did anticipate a few weeks ago was the dollar index, which had done some damage as of the December close by our work. Then it rallied. And in fact, it made a marginal new high for the recent rally, not the high. The high was back in a couple years ago at 103.50. Got back up to the high 99s. In the last 3 weeks, it's dropped 3 full points. In fact, last about 8 trading days, it's dropped 3 full points. Dollar index, I'm speaking of. Mm-hmm. The euro has surged and the yen has surged. If you close the dollar index cash, which traded today under 97, if you close out the week anywhere in the low 97s, you will blow a parallel price channel that even we're using price here now. Momentum is already in decrepit state. The price channel goes all the way back to mid-2016. It's like a little tube that it's been contained in for more than a year and a half. The rise of the tube is marginal. It's been really like a 4% range that the dollar index has been caught in. Same with the euro and the yen. They've been caught in very narrow ranges. How come the world is getting volatile in all areas, all asset categories, except the major foreign exchange markets? So it perplexed us a few weeks ago. We put out a report that said, this is not right. Something's going to happen here. And sure enough, it did. Whether it was anticipation of the Fed, narrowing of the interest rate differences between the U.S. and Europe and so forth, which has now happened. 10-year notes are now below 1%. Fed has cut a half a point. They've fully joined in the their comrades over there in Europe and Japan. And this has hurt the dollar. But the dollar really could get hurt if you close out the week anywhere down around 97 cash on the dollar index. It's just the beginning of the downside. Now, gold, as we know, has gone from the reaction lows in summer, fall of 2018. It's gone from the 1100s up to upper 1600s with no help from a weak dollar. If the dollar suddenly now becomes weak because rates here are starting to careen and join the Europeans and the BOJ, then that's a whole new wind at the back of gold.
Yeah.
And it's behaving that way. So all these cross currents are finally making good sense. And I would not bet on the Federal Reserve half-rate cut. They've just fired both barrels today. They're out of the picture. You can write them off. They've done their thing. Trump can't yell at Powell anymore. Powell can probably take a vacation, go play golf or whatever he does. He's already done it. And the question now is, what's going to save the stock market?
Yeah, that's a good question, because here it is, Michael. It seems extraordinary to me with the rate cuts announced by Powell today, that the equity market isn't getting any wind at its back at all from it, is it?
Well, they priced it in yesterday probably, and we ran a chart in a weekend report. Not that price comparisons always turn out that way, but in 1929 and 87, two of the most prominent crashes in the last 100 years, there were virtual overlays of each other. And our action now is, we regard it as even worse, tending to be worse than 29. But in 29 on the way down, there was what we called a rally that fooled the majority. And there was one day, this is prior to the crash, about a week prior to the crash, where you went down so big you would have thought that was the crash day. Enormous. It was like a day you'd never seen in your lifetime. But it came back that day and closed near the high. Well, like last Friday did, in the S&P. Closed well off the low. That one-day rally in 1929 was actually a 10% rally from low of the day to high of the day.
Wow.
The next two trading days, the Dow went sideways. In fact, one of those days was a Saturday. They used to trade on Saturdays back then. So in other words, you had this huge 10% rally, and then it went sideways, and then the crash occurred over the next 3 days. So they took you off the page. Well, we just had a 9.7% rally, rough calculation, from Friday's low to today's high, fully backed by a piece of news that everybody was expecting, maybe even more so, 0.5% cut, not a quarter. Let's see if the rally holds, or if this is just another rally that fools the majority. Well,
time will tell, but it really is a time to own gold, I think, and perhaps commodities too sometime if the dollar keeps getting weaker, huh?
Yes, absolutely. Yeah, that could be a factor there.
All right. Well, we'll have to leave it go at that, Michael. Thank you so much for coming back on today, and especially at this time, it's really good to hear from you what you have to say, because these are. It's certainly not. We're not watching paint dry anymore, as you used to say, and that's one of your favorite expressions. That was how you described the dollar market until now, but now we're about to see some changes, I guess, huh? Maybe some dramatic ones.
Right.
All right. Well, thanks very much, Michael. And
Thank you.
We'll look to talk to you again in a couple of weeks. All right. All the best.
Bye-bye.